Have you ever wondered why your money changes value when you travel abroad? Let's take a look at how exchange rates work. At its simplest, an exchange rate is just the price of one country's money in terms of another country's money. If the rate is 1.08, it means $1 buys about €1 and 8 cents in the global market. Several factors drive these changes, including how well an economy is performing, interest rates, and the overall demand for that specific currency. A strong currency makes imports cheaper for residents, while a weaker currency can help domestic companies sell their goods more easily abroad. Rates are rarely static. They fluctuate constantly throughout the day based on supply and demand in the global currency markets. Think of the exchange rate as the bridge that allows global trade to function smoothly between different financial systems. Understanding these rates helps you manage your money when traveling or investing internationally. Subscribe for more financial basics.